The office market in Dublin had a very strong year last year. Indeed, total take-up came in at over 170,000 square metres, which is up on the 10-year average in 184 individual leasing transactions happening in the market. Another very strong year is in prospect in 2014, considering the volume of foreign direct investment that we're continuing to see coming into this country, fuelled to a large extent by our 12.5% corporate tax rate, and equally with the Irish economy showing signs of improvement, indigenous company expansions will fuel growth. In addition to the uplift that we saw at the prime end of the market in 2013, we would expect to see some of that filtering down to secondary and provincial markets over the course of the next 12 months. 2014 will also be significant because we'll see the return of the crane to the Dublin landscape for the first time in many years, with some new office development taking part. Most of this development will be fuelled on the back of pre-letting activity, but equally we could see some speculative development coming on stream for the first time. This in turn will give rise to demand for development funding, whether it's from the Irish banks or from private equity providers. We'll also see an increase in the number of refurbishment and redevelopment projects, particularly in prime locations where supply is certainly a significant issue. The vacancy rate in the Dublin office market fell considerably over the course of the last 12 months. It started the year at over 21% and ended at 15.5%. So we would expect to see a further decrease in availability over the course of 2014, with the overall vacancy rate likely to end the year at about 13.5%. We will see further decreases in each of the various sub-markets, and the supply shortage of Grade A accommodation, particularly in the city centre region and in the south suburbs, will give rise to some further rental growth. In addition to the 25% uplift in office rents that we saw in the last 12 months, we're likely to see another 15% during the course of 2014, bringing prime headline office rents towards €40 per square foot. This in itself is significant because at these sort of rental values, development is potentially once again feasible. Over the last number of years, tenants have had the upper hand in lease negotiations, but with supply shortages becoming more evident, the balance of power is clearly going to move back towards landlords, with much more intense negotiations anticipated over things like lease lengths, break options and rent-free periods. A significant development during 2014 will be the adoption of the Strategic Development Zone, the SDZ, in Dublin Docklands, enabling development to start in this very strategic location in Dublin. The commercial lease database came into being over the last 12 months, and we would expect to see some improvements in this over the course of 2014, leading to much needed improvement in transparency in terms of office leasing transactions. So in summary, a very strong year anticipated in the office sector in Dublin in 2014.